traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, I might have went to go see Mickey and Goofy for the last 7 days, but I'll tell you what, these markets weren't even slightly goofy, neither was the news. I came back home from Disney, I started reading newspapers. You know me, I like to read stacks of them, so I went through all the industry regs I could go through over the weekend, Monday and Tuesday, and I'll tell you what, the news looks about as strong as the market has been during the week I was gone. This video, by the way, is being filmed on Tuesday night for Wednesday's trading, 7/29/09. Traders, let me tell you something about the news. I don't know how many of you read the news, but I like to keep the news in mind because it usually melds very well with the chart formations, and together I get a really good picture of what the future looks like. And in the news, there were very few bad or bearish articles. Most of them were quite bullish articles, or at least articles that would make you say, hey, maybe it's time to start getting back into this market. And what I'm talking about is this. Consumer debt in the United States shows signs of improvement as fewer American households appear to be falling behind on debt payments, says Mark Zondi of Moody's. Thank you, Mark Zondi, for the comment. Guy does a lot of research. He said that to the Wall Street Journal, and I thought I would repeat it. More than that, existing home sales, you know, the houses that have been sitting around with those for sale signs for the longest time, the last year and a half, they have rose 3.6%, and it's the third straight monthly rise. The housing, if the housing turns, traders, everything turns. That's where it all began. Remember that, right? Housing up 3 times, 3 months in a row. The Fed trims its program for loans to banks from $125 billion down to $100 billion. Second decrease in as many months. The Fed, once the economy starts to show signs of improvement, the Fed wants to begin or starts to begin its daunting task of exiting the marketplace. So the Fed sees something going on because they're slowing down on how much money they're shelling out or lending to the banks. In Europe, while the UK gross domestic product does slip, the productivity did not look very good, but productivity in Germany, which is a huge portion of what goes on in Europe, is showing signs of improvement, especially in the manufacturing sector. In fact, the FTSE, even though numbers didn't look so good in London, the FTSE climbed for 11 straight sessions, 11 straight up days in the FTSE. Spain, I know you might be saying, well, what about Spain, Oscar? Spain is a little bit different. It's a bit misleading. They have like 18% unemployment in Spain, but you know what? Basically, Spain's bubble was the real estate went through the roof and everybody borrowed against their real estate. That is what caused the biggest bubble in Spain. So you can understand why, while real estate is down right now, Spain is having a lot of unemployment. They didn't have the huge manufacturing boom that we've seen in the last 5 years. A lot of it was based on them borrowing money against their homes. So I don't know if you can actually use Spain for the European picture, but Europe's starting to look better. And I've told you this many times, traders, in many of my videos. Europe, they were going up a year and a half, 2 years ago. When we started to crack, Europe was continuing to go up. It took Europe almost 2 months to begin to follow us down. So you'd expect that Europe has a couple of months behind us as we turn back up. More good news. OPEC says they expect prices in energies markets to drop in the coming weeks and months ahead as, listen to this, stockpiles of fuels are building up everywhere, including diesel and heating oil and crude, and space to store it is running out. Suddenly the world is awash in crude. What happened while I was in Disney? Was there another dinosaur age or something? Where's all the oil coming from? A year and a half ago, the world was running out of oil, remember? At $145, the world's running out. Now in the $60 zone, they're going, there's so much oil, we don't know what to do with it. That is a good sign, traders. Over in Asia, they're having a party. I don't know if you've been reading the papers about Asia. The Hang Seng Index crossed the $20,000 mark. That's the highest finish. I don't know. See if I can remember. It's like the highest finish since the beginning of the year. In fact, that's the highest I've seen it so far this year. The Shanghai Composite Index, the Singapore Index, and Vietnam are all doing really well. Tokyo's Nikkei joined the party, and South Korea has shown the largest growth we've seen in 5 years. That is signs of world market recovery. Then back in the U.S., JP Morgan raises salaries, traders. If they're raising salaries, you know for sure that's another sign that things are looking better. Because imagine if they raised salaries and their forecast was for lower, you know, they'd be in a lot of trouble. The public would hang them. So if JP Morgan's starting to raise salaries, they're expecting our market to pick up. So it looks to me like finally we have fundamental and technical direction, which is likely up. In other words, we are official buyers of dips, especially that we are now above that head and shoulders, and we'll get to that in a couple of moments. On a side note, reading through the papers, I also read about Warren Buffett. Does anyone know about this? Warren Buffett has a cartoon coming out either at the end of this year or the middle of next year, and it's about Warren Buffett giving financial information or financial advice to children from Nebraska. Imagine that. Go Warren Buffett, right? If they're starting to put out cartoons, you know the world's starting to feel a little better about the economy. So I looked at the news, I read all of that first, and then I started to look at some charts, and boy, oh boy, what I seen in the charts, what a great week last week was, especially that we got above that head and shoulders formation. Probably the last 5 videos I did for you before my vacation was all centered around whether or not we get above the head and shoulders, that we were sellers of rallies until we got above the head and shoulders, and once we did get above, we become buyers of dips. I am here to officially say the indices are now above the head and shoulders formation. Yeah, baby, we need that. Now that we're above the head and shoulders formation, the last thing we need is a test on the downside of that head and shoulders. If it holds, we blast off. And traders, I tell you what right now, if we come down and test that head and shoulders and hold, I am officially removing Don't Fall in Love with the Upside off my board, and I will probably replace it with Don't Fall in Love with the Downside. Now, traders, I've mentioned this head and shoulders, you know how many times before I left. Glad to see we got above it. Now I want to show you on charts what it means, what it looks like. Let's go to the charts right now. Okay, traders, we talked about that head and shoulders for countless videos before my vacation. Now I am back, and if you can see what happened here, that head and shoulders right here, we climbed above it. And what I'm expecting is if there's any downside movement, it should come down and test in this area, which is the top to the middle of the head, which is, of course, what we expected to test on the way up, and if it failed, we'd break, right? Well, we got above it and took off a little bit. If we come back down and hold this area, which is like the 950s to the 930s, somewhere in between there, if we hold in this area, this thing will absolutely take off. If we hold here, then I will officially remove Don't Fall in Love with the Upside off my board, because that tells us this right shoulder is done and it's ready to go. When I say the right shoulder now, I'm referring to the big inverted head and shoulders you see circled in red right here. Big V bottom, big inverted head and shoulders, which is bullish, above the Omni Proprietary Moving Average. And speaking of which, this very same chart I used in a class about 2 to 3 weeks ago at my site. During the day we held a live class. What I explained in that class was the 200 bar moving average, the Omni Proprietary Moving Average, they were far apart, they got further apart, they got even further apart, and then they started to narrow and get together and get together. When they crossed, that was our low tick on that head and shoulders move. Right when they came together, we took off and then got above the head of the head and shoulders. Extremely positive, traders. That's the S&P, that's the daily bar for the S&P. Let's go look at a couple more charts here. Okay, traders, the chart you're looking at now is the Dow Jones Industrial Average daily bar. Same thing, we have a very nice V bottom forming here. We have a huge inverted head and shoulders. We had the Omni Proprietary and the 200 bar moving average kiss each other. And in fact, the low in the Dow came in right at the Omni Proprietary. Right there was the low. We started to go higher. Then we got above this little interim head and shoulders, took off above. And if there's a head test right here and it holds, once again, this looks very much like the S&P as we would expect. We are in for a blast off. That means we could shoot straight up right through October, or at least into October. As we all know, October always has its rocky period, so we don't know what'll happen. But if we come back down and test this now in the summertime, we will take off and go up for a good 2 to 3 months here. So I hope that happens. I am certainly keeping my eye on it. Indicators are calling for a slight pullback, which would give us a head test, which would be perfect. It would fit the scenario. For now, I am certainly buying dips no matter what happens, and if we just take off from here, even better. But the best thing that really could happen here, technically, traders, would be a test of this head, of the head and shoulders that we broke out above. Come back down, test it, and go. Now, I'm going to blow that up for you a little bit so that you can see it in a clearer version. What I'm going to do next is blow up just this right shoulder for you. Let's take a look at it. Okay, traders, back to the S&P because it just illustrates a little better. I was able to blow that up and get a clearer picture for you. This was the right shoulder of the huge inverted head and shoulders, right? Then we have this little head and shoulders that we were all worried about we may never get above. Well, we did get above it, tick, 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 and then took off last week, right? Now we got a little bit of a flat top in here, and sometimes you can expect flat tops produce market drops, as we know, but we could easily blast right off through here. Back to the test area. If, in fact, we come down from here and get into this test area and hold, I say we have a major rally coming our way. So far, so good. And now that this is blown up, you can see exactly where this crossed. The Omni Proprietary with the 200 bar was our low tick, and it just exploded from there. So the averages are holding well. The formations are holding well. We're above this head and shoulders. We got above it on the test. On the way back down, we get to that test area and hold, and the party begins, traders, let me tell you. Now, with that test area, there are markets that seem to move a little bit ahead of us lately. One of them is the DAX. Let me show you what the DAX looks like right now, because I think the DAX will kind of paint the picture I am trying to portray of a head or a test of the head and shoulders. Okay, traders, what you are looking at is the DAX, the German DAX daily bar chart. Same thing as in the U.S. market. You had the head and shoulders. Then we rallied up, got above the head and shoulders. But look what's happened. Rally, rally, rally. And then we came all the way back down to here as of Tuesday afternoon. Looks like it may want to come down and test this area. The test area happens to be between 51.50 and 50.50 in the DAX. If we get into that area and hold, traders, we have a bull market on our hands. The papers are calling for a bull market. Some of the newspapers, or I should say the magazines I read, clearly stated the market is now bullish and the recession is over. And I'll tell you what, these charts are starting to look exactly like that as well. Once we got above that head and shoulders, that was a clear-cut signal that this market has strength. A test and a hold right here would be an absolute signal, and the party would begin. Keep your eyes on that. Now we're going to take things out a little bit. We're going to move out to a weekly. I have told you, and we've noticed that lately in this up move since March 6th of this year, the NASDAQ has become the leader, right? Well, we're going to go look at the NASDAQ weekly chart now and see what that's doing. Okay, traders, now we are looking at the leader of late, the NASDAQ, on a weekly bar chart. And traders, this average right here, this purple average, is the Omni Proprietary Moving Average. And you know what? On the weekly, the NASDAQ is above it, baby. Yeah! That's just what we need. If you remember, if you recall, on the way down, I started showing weeklies when the NASDAQ first got below the Omni average and stayed below, and then the other indices, the S&P, the NASDAQ, the FTSE, everything else started to get below. Well, the first one to get above so far in the picture has been the NASDAQ. This is the average. Here's the NASDAQ right now. We got above the Omni Proprietary, and I'll tell you what, traders, if you are one of my video fans and have watched enough of these videos, you know the power of that Omni Proprietary Moving Average, and when markets get above it or below it, usually you get a very powerful move in that direction. So if we spend another week above that average, I would say we're going up here and testing this stuff easily. We'll be blasting off in this NASDAQ. So far, NASDAQ looks very, very strong, traders. Pull your monthly charts, pull your weekly charts, pull your daily charts. Take a look at that NASDAQ, which is the leader of late. Now, traders, you've seen the indices. I want to show you another market that's really caught my attention lately. So let's take a look at this next chart. Okay, traders, we are looking at November soybeans daily bar chart. November soybeans, we have been inside of a channel, but it looks to me like this channel's getting old and the market wants to now challenge and get above that channel. We are We keep touching and touching the 200 bar moving average. We have not settled above it yet, but it comes in exactly at the top of this trend channel line, and it looks to me like it wants to go higher. Technical indicators in beans are clearly pointing towards the upside, so any downward movement in US dollar index would produce upward movement here in the soybeans. And if it were just the soybean chart, I would say, well, maybe it's a fluke. But the leader of beans is soy meal. I don't know how many of you know that, but you look at a soy meal chart, it almost always goes first, and it lets you know what will happen to soybeans. So the next chart I want to show you is the soy meal. Remember, this is the 200 bar moving average, right? Let's go look at the soy meal. Okay, traders, what we are looking at here is the soy meal August daily bar chart. And as you can see, the move started first in soy meal. But the interesting thing here is that this is the 200 bar moving average. Soy meal stopped right at it, stopped cold, and started its rally. And here we are now getting ready to get above, or at least test, the omni proprietary moving average. If you get above that, blast off city, here we come. If this is the leader of the soybeans, soy meal, then soy meal already held the 200 bar, and it's showing us that the soybeans will get above the 200 bar moving average. So with this in mind, the leader pointing north in soy meal, it's probably going to take the soybeans with it. Keep your eye on soybeans. Keep your eye on dollar index. When dollar index has down days, soybeans and soy meal will have up days. Trade accordingly. So traders, you see those charts? I mean, wow. Talk about the head and shoulders, just to make sure that you understand what I was trying to show you there or illustrate in those charts. We had the head and shoulders. We were worried we'd never get above it and break down. We did get above it nicely in the indices. And now if we can come back down and test it and hold, you have a blast off. And I kid you not, that will come off my board. Do not fall in love with the upside yet. Will be erased from my board. And likely I will put don't fall in love with the downside, because I'd expect a lot higher out of these markets if, in fact, we get that test and it holds. Now, we could go straight up and never get that test, but, you know, a good market, a good, strong market backfills back down to support areas and then takes off from there. So I do expect that test to come our way shortly, but we will take this one day at a time. As you know, these videos are made for short-term trading. They're usually made for the next day, but this is a slightly longer-term look, the next few days, the next week. If we get that test and hold, boy, oh boy, the party begins. Traders, don't forget I tell you this in every video, a stop is your best friend. Never trade without stops, especially you traders who've gotten long in the last 5 to 7 days. Make sure your stops are under this market to protect your profits, because if you do turn around and go for that test, most of you are going to be stopped out, but at least you'll stop losing. And why do I say you want your stops in? You know what? Let me stop here for a moment. If you're saying, well, Oscar, that's a little insane, because if we have our stops in here and the test does hold and it goes back up, well, what if the test doesn't work? And what if it goes, uh-oh, zoom, and in 2 days we drop $50 or $80 in the S&P? Then you'll be going, why didn't we listen to Oscar and have our stops in? So look, traders, no matter what this move produces, you have your stops in so you don't get knocked out of this market, so you don't blow out your account. If it holds and it takes off and you don't get stopped out, wonderful. If it doesn't hold and you do get stopped out, well, wonderful, because at least you had your stops in. No matter how you look at this, you need to keep your stops in, especially when you have a market that's finally building steam like this one. It will backfill and go higher. Make sure you don't get caught up in any of those backfills. All right, traders, make sure you come on down to the site. It's www.livewithoscar.com. I am back. I am in those chat rooms. I will be running trades and doing some lessons. So make sure you come on down and join me, and I'll speak to you traders shortly. Give me a call anytime day or night, 702-629-4755. And I think I'm out of here, traders. Make sure you keep your emotions out of trading. One of the best things you can do to help yourself with that is to say this to yourselves every morning, every afternoon, every evening. And you know what that is? Stops are in. Emotions are out. Futures trading is risky and can cause substantial financial loss.
We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.